our CEO, Mr. Longgen.
Thank you, Kevin. Good evening or good morning, everyone. Our efficient operation of polysilicon facilities in the first quarter of 2023 resulted in the production volume of 33,848 metric tons. Our production cost decreased by 5.5% in renminbi terms, primarily due to a reduction in the procurement cost of metallurgical grade silicon powder. For the quarter, we generated $490 million in EBITDA, with strong operating cash flow and maintained a healthy balance sheet. Our cash balance further improved to 4.1 billion, and our combined cash and banking note receivable balance reached to $4.9 billion. In April, we completed the construction of our Phase 5A, which is 100,000 metric tons polysilicon project in Inner Mongolia, and successfully started initial production of polysilicon. We expect to ramp up production to full capacity by the end of June 2023, bringing our total polysilicon nameplate capacity to 205,000 metric tons per annum. Therefore, we expect our total production volume to be approximately 44,000 to 46,000 metric tons of polysilicon in Q2 2023, an increase of 30% to 36% as compared to Q1 2023, and approximately 193,000 to 198,000 metric tons of polysilicon in the full year of 2023, an increase of 44% to 48% as compared to last year. In addition, based on the schedule, our new semiconductor-grade polysilicon project with 1,000 metric tons annual capacity is expected to be completed and start pilot production by the end of September 2023. With its new fully digitized and highly automated production system, we believe our Phase 5A in the Mongolia project will bring in the company to a new level in terms of the overall competitiveness, including its production capacity, lower cost structure, and superior product quality. Polysilicon demand was weak in January due to the seasonal slowdown in the solar PV industry. In February, lower module prices stimulated end market demand, causing a meaningful recovery in demand and price improvement across the solar value chain. In March and April, polysilicon ASPs declined gradually due to increased supplies and constrained short-term demand for wafers caused by the limited supply of high purity quartz used in silicon ingot production process. Despite the SP decline in the quarter, in our major operational subsidiary, Xinjiang Daqo, we still achieved a very strong gross margin of 71.4% and a robust net income after tax per unit of polysilicon sold of approximately 115 yuan per kg, which we believe are significantly higher than those for many of our competitors and reflect our outstanding quality and cost structure. Recently, we have seen a clear trend that the SP gap between the high quality and lower quality polysilicon has started to enlarge, and the demand for high quality N-type of products is increasing. We expect that this trend will enable us to differentiate ourselves from our competitors based on our high quality and lower cost of polysilicon ready for the next generation N-type technology. We believe that the overall demand for solar PV will continue to grow in the coming quarters, and that continued capacity expansions by downstream manufacturers will lead to further increases in polysilicon demand. In the second quarter of 2023, our Phase 5A project will start to continue a meaningful output of approximately 10,000 metric tons to 12,000 metric tons of polysilicon. We plan to reduce our inventory to approximately 5,000 metric tons by the end of the second quarter. To achieve this, we will need to increase our shipment to 59,000 metric tons to 61,000 metric tons in Q2, an increase of 133% to 141% as compared to Q1. In November 2022, our board of directors approved a $700 million share purchase program, effective until December 31st, 2023. As of now, we have already spent $85.1 million and repurchased approximately 1.688 million ADS. On April 6, 2023, our subsidiary, Xinjiang Daqo's cash dividend plan for 2022 was approved by its shareholders meeting. Therefore, as a 72.7% shareholder of Xinjiang Daqo, we expect Daqo New Energy to receive the dividend distribution in May with an amount of approximately RMB 4.96 billion after tax, which could be the financial results to implement the improved share repurchase plan. We believe a new era for solar PV has just begun. The continuous cost reduction in solar PV products is expected to create substantial additional green energy demand, likely exceeding most analysis expectations. It is generally expected that solar PV will eventually become one of the most important energy to power the world. In addition, as solar PV technology keeps evolving, we believe that the increasing needs for polysilicon of very high purity will help differentiate us from our competitors. Thanks to our ability to produce the type of polysilicon required for the next generation of N-type technology, we will continue to maintain solid growth and make sure to have one of the best balance sheets in the industry in order to capture the long-term benefits of our global solar PV market. Now, let's move to the outlook and guidance. The company expects to produce approximately 44,000 metric tons to 46,000 metric tons of polysilicon during the second quarter of this year. The company expects to produce approximately 193,000 metric tons to 198,000 metric tons of polysilicon for the whole full year of 2023, inclusive of the impact of the company's annual facility maintenance. Now, I will return the call to our CFO, Ming, please.
Thank you, Longgen, and good day, everyone. Thank you for joining our earnings conference call today. Let me start with a discussion on our company's balance sheet and our strong cash position. As Longgen indicated, the company ended the first quarter of 2023 with cash balance of $4.1 billion, which is an increase of more than $600 million as compared to the end of 2022. Inclusive of the company's bank note receivable balance of $791 million, total cash and bank note receivable balance reached $4.9 billion at the end of the quarter. These bank note receivables are notes issued by major domestic banks used for trade financing purpose and can be either immediately redeemed for cash or used to pay suppliers for raw materials and equipment purchases. On a per share basis, reflecting Daqo New Energy Corp's 72.7% ownership of our operating subsidiary, Xinjiang Daqo, this equates to approximately $45.70 per share of ADS. This represents the value of the cash alone and excludes the value of our property, plant, and equipment, which at the end of the quarter has a $2.88 billion value on the balance sheet and is represented by our two world-class polysilicon production facilities, which has combined nameplate capacity of 205,000 metric tons and continue to generate healthy operating cash flow on quarterly basis with our leading product quality and low cost structure. And this is witnessed by more than $800 million in cash flow from operating activities in the first quarter of this year. With regard to our capital expenditure and capacity expansion plans, for the first quarter of 2023, purchase of PP&E was approximately $277 million, which was primarily related to our polysilicon projects in Baotou City, Inner Mongolia. At the end of March, approximately $1.2 billion had already been spent on the Inner Mongolia Phase 1 project, with total planned capex of approximately $1.4 billion. We expect the remaining $200 million will be spent by the end of this year. For Inner Mongolia Phase 2, we expect total capex will be approximately $1.4 billion as well. We currently expect capex related to this project will be approximately $800 million for this year, and the remainder will be paid in 2024 and 2025. For the Inner Mongolia Phase 2 project, the project construction schedule may be adjusted based on market conditions, and we may adjust both project construction schedule and project progress and capital expenditure plans accordingly. Now I will discuss the company's financial performance for the first quarter of 2023. Revenues were $709.8 million compared to $864.3 million in the fourth quarter of 2022 and $1.28 billion in the first quarter of 2022. The decrease in revenue compared to the fourth quarter of 2022 was primarily due to a decrease in average selling prices. Gross profit was $506.7 million compared to $668 million in the fourth quarter of 2022 and $813 million in the first quarter of 2022. Gross margin was 71.4% compared to 77% in the fourth quarter of 2022 and 63.5% in the first quarter of 2022. The decrease in gross margin compared to the fourth quarter is primarily due to lower average selling prices, mitigated by lower production costs. SG&A expenses were $41 million compared to $44 million in the fourth quarter of 2022 and $15.5 million in the first quarter of 2022. SG&A expenses during the first quarter includes $28 million in non-cash share-based compensation costs related to the company's share incentive plan, compared to $28.4 million in the fourth quarter of 2022. R&D expenses was $1.9 million compared to $2.7 million in the fourth quarter of 2022 and $2.1 million in the first quarter of 2022. R&D expenses can vary from period to period and reflect R&D activities that take place during the quarter, which is primarily related to our quality improvement initiatives. Income from operation was $463.8 million compared to $623 million in the fourth quarter of 2022 and $796.9 million in the first quarter of 2022. Operating margin was 65.3% compared to 72% in the fourth quarter of 2022 and 62% in the first quarter of 2022. Net income attributable to Daqo New Energy Corp shareholder was $278.8 million compared to $332 million in the fourth quarter of 2022 and $535.8 million in the first quarter of 2022. Earnings per basic ADS was $3.56 compared to $4.26 in the fourth quarter of 2022 and $7.17 in the first quarter of 2022. Adjusted net income attributable to Daqo New Energy shareholders, including non-cash share-based compensation costs, excluding non-cash share-based compensation costs, was $310 million compared to $363 million in the fourth quarter of 2022 and $538 million in the first quarter of 2022. Adjusted earnings per basic ADS was $3.96 compared to $4.65 in the fourth quarter of 2022 and $7.20 in the first quarter of 2022. EBITDA was $490.2 million compared to $648.5 million in the fourth quarter of 2022 and $826.8 million in the first quarter of 2022. EBITDA margin was 69% compared to 75% in the fourth quarter of 2022 and 64.6% in the first quarter of 2022. Now on the company's financial condition. As of March 31st, 2023, the company has $4.13 billion in cash and cash equivalents and restricted cash, compared to $3.52 billion as of December 31st, 2022, and $1.12 billion as of March 31st, 2022. And as of March 31st, 2023, notes receivable balance was $791 million, compared to $1.13 billion as of December 31st, 2022, and $1.5 billion as of March 31st, 2022. Now on the company's cash flows. For the 3 months ended March 31st, 2023, net cash provided by operating activities was $807 million compared to $231 million in the same period of last year. And for the 3 months ended March 31st, 2023, net cash used in investing activities was $268.9 million compared to net cash provided by investing activities of $170.4 million in the same period of 2022. And for the 3 months ended March 31st, 2023, net cash provided by financing activities was $59.9 million, and this was zero for the same period of 2022. The net cash provided by finance activities in the first quarter of 2023 was primarily related to the net proceeds of $140 million from bank borrowings, offset in part by $80.1 million spent in share repurchases. And that concludes our prepared remarks. Now, operator, would like to open the call for Q&A from the audience.
Okay. We will now begin the question and answer session. To ask a question, you will press star then 1 on your telephone keypad. If using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star then 2. At this time, we will pause momentarily to assemble our roster. Our first question will come from Phil Shen with Roth Capital Partners. You may now go ahead.
Hi, everyone. Thanks for taking my questions. First one is on your shipment volumes. I think why have volumes been so low as a percentage of production for 2 quarters in a row? We thought you might ship more than 100% of your production in Q2 because of the inventory. Sorry, in Q1 because of the inventory that you didn't ship in the prior quarter. When do you think you'll release that inventory? Thanks.
I think the first quarter still is Chinese New Year. I think January, the sales really is very slow. And also, remember that the downstream, the wafer producer, the capacity, in the last year, starting November, December, they almost, reduce the capacity to the minimum capacity, the maintenance capacity, we call maybe 20-30%. So as their capacity, quickly come back, so we are starting selling actually in February and March. And some March shipments to the end of the month, we have to move to second quarter. So basically, so far, this quarter, today, as of today, the April, we already signed contracts more than 20,000 tons right now. So we see second quarter, the selling volume should be high. So we expect, we can reduce our inventory. By the end of last quarter, it's 20,000 tons. By the end of this quarter, second quarter to the 5,000 tons, just the regular shipping goods in the way, So basically, this month, sales volume mostly we're shipping to this quarter.
Great. Thank you, Longgen. And I did see your Q2 shipping guidance there, I think 59 to 61,000 metric tons. So that's great. Can you talk about the outlook for poly pricing for Q2, Q3, and how you're seeing 2024 given the supply-demand situation for poly? Thanks.
Basically, I cannot give you the projection of the future. But basically, if you look at our Q1, our selling price is $27. We see the selling price, especially the wafer prices, go down. Then if you look at China, the future, Q3, Q4, the module selling price, the contract price, bidding price also is slowed down, you see. So basically, what that tell you is, if from silicon wafer cell module, the cost right now today is around like 98 cents RMB. So you're selling module, if for Q4, you see you're selling like 175 cents. You divide by the value-adding tax, so the net maybe is around like 150. So your gross margin whole industry is around like 50 cents or even 45 cents. Compared last year, you're selling last year is around 74 cents. That's the module selling price 2 RMB per watt. So basically, we will see second quarter, definitely I think the SP will slightly go down. And how much, I cannot tell you, because, we see right now the price is stable around 180 RMB, per kg. Maybe, in the next 2 months, will continue to slow down. But I think, still the SP will be, I think, between the US dollar around 20 to 25. In the third quarter, it all depends on how many the new, I think, production come out. How big, the demand pick up. So really, we think, Q3, the selling SP will be stable, maybe as Q2. Then Q4, mostly is challenging every year, okay? Not only because of holiday, Western, but also, I think, in China, the traditional, I think, the bargain between silicon and the wafer. So basically, for Q4 is the challenge quarter. So maybe I think it will go down to 150, even 120, So I cannot tell you the exact figure. And if you look at 2024, as we said, the demand is continuing to grow. Of course, silicon output in China also continue to increase. So Daqo is differentiate ourselves is to selling more high quality of N-type silicon to differentiate ourselves from other people. So we hopefully our ASP can, selling a little higher than our competitors in China. Today, Wacker, OCI, they're still selling around like, $35, $37, per kg. The reason is because, use their silicon outside of China can ship into, US market. So the differentiator is already there. You see, that's a logistically differentiator. And our effort is on our quality, our cost. So even though we think 2024 is a challenging year, okay? Let's say the industry maybe gross margin is around like 5%, even 10%. We hope Daqo can achieve, premium 10%, 15%, a little more. So we can do 15 to 20%. That's only I can tell you.
Okay, that's a lot of color. Thank you, Longgen. You talked about the pricing premium that you think you might be able to get. I think you just talked through that a little bit, but specifically, I think in Q1, I think your ASP was close to $27 per kilogram, and the average spot price was closer to $24. Can you talk about what your realized premium is due to your quality? Is it about $4 a kilogram, or is that difference in the first quarter primarily due to better timing of your poly sales versus spot pricing? Thanks.
Basically, right now, N-type and P-type, we already see the difference, I think, is there, around 15 RMB to 20 RMB per kg. We think, that difference will be enlarged, maybe later. Because, you see, as the TOPCon capacity continue to come up, then the demand for N-type will more. So basically, we think in the future, our selling price should be if we can selling 70% of our products is N-type, so basically I think the price may be $5, difference. It's possible, but I can't tell you see exactly the future, how the future going, really, it's a lot of challenge,
Yep. Okay.
But the most important to us, the most important to us is we have a fortress balance sheet. As Ming just said, right now today, the banking, notes receivable plus cash is almost $5 billion. We continue to generate, the cash, operating cash, and we try to control our capex as the market continue going. For example, if the market go into, more war scenario, then in Mongolia 5V, we can slow down, capex. So we are continue to focus our, I think, straighten our balance sheet. That's most important, I think.
Great. Okay. And given that, this is my last question here, are you planning to do additional buybacks this year beyond the $700 million approved? What are your thoughts on that, given the cash that you have? Thanks.
At this moment, I think we just declared $700 million. We already used, I think, around $85 million. So we only left is $650 million. And the dividends, I think, to throw the foreign exchange, I think were heated accounts, I think, the early of May. So even let's say we still have like $650 million compared to the capital market, it's almost, 18% of our total share, outstanding shares. That's a lot. So basically, that all the repurchase program, we have to, change to from renminbi to foreign exchange. So the only right now reliable source is the dividend declare. So basically, I only can tell you so far only is the, I think, today, by the end of this year, we still just forecast $700 million US dollar purchase program.
Okay. Thank you very much, Logan. I'll pass it on.
Great. Thanks, Phil.
Our next question will come from Gary Zhou with Credit Suisse. You may now go ahead.
Hello, management. Thank you for taking my questions. This is Gary Zhou from Credit Suisse. So two questions from my side. So firstly, also to follow up on the buyback. So as Logan has mentioned, basically the rest of the amount is quite a significant amount to proceed. So just wondering if the company have a kind of a more, can give us more color on the timing, how we're gonna proceed all those buybacks, or if there's a kind of a price range that we would think we would do more kind of a share buyback. And secondly, a quick question. Just wondering, if management can give us some color on the April kind of a polysilicon sales. So have we, kind of start to see our